Alright, so the CPI just dropped. I'm going to be going through this pretty quickly, but just to give you guys the preface, okay, before this CPI data actually dropped, a lot of us were actually expecting that inflation wasn't that big of an issue. Okay, well, that's an understatement. Never mind. Inflation is a pretty big issue. Okay, but if you were to put aside inflation for the time being for the past 3 days, okay, if you have not watched my previous video about the banks and such, go over to my channel. I just uploaded it yesterday. I talked about how basically the banks were collapsing and how this actually moved all alongside with inflation as well. FOMC meeting, people are actually talking about how 50 basis point increment was going to be a thing. The bank collapsed. Now people are saying that a 25 basis point decrement is going to be a thing, according to Nomura. Okay, so right now we have to talk about inflation. Okay, so inflation actually came out alongside with expectation. Okay, so over here you can look. Okay, so 0.4%, according to expectation, we're expecting it to be 0.4% month over month, came out to be 0.4% month over month. We expected a 0.4% core month over month. It actually came out to be core 0.5 month over month. So slightly hotter than we actually expected it to be. However, you do need to take into consideration that over here, index for shelter was the largest contributor to the monthly all item increase. So, if you remember what I actually talked about in my previous CPI videos, usually I always talk about this, which is that shelter usually takes a little bit of a lag before you actually see prices go down. Okay, as compared to all your different, your house your furnishing, you see your food, you see your different insurance, you see used cars and trucks, energy prices. All those prices are being reflected almost instantaneously, and you can see how those price changes accordingly. However, for houses prices, or rental prices, Airbnb prices, all these sort of shelter prices as a whole, those have a lagging sort of factor behind it. So for example, if I were to actually have an increase in, for example, the prices will come in maybe 6, maybe 8, maybe 10 months later, and the same thing would come along with the decrement. The reason being is because when a house gets transacted and get rented out, when a tenancy agreement is being signed, it's usually being signed for a year, sometimes even 2 years. So the lagging period is going to be quite huge. So whenever there is a huge jump forward, usually it's because of all those people suddenly signing it higher and higher and higher. And then you start to realize that, all these so-called increases in the past few months are most likely going to be going down, because once those tenancy agreements get re-signed, those people are going to be signing cheaper rents, effectively. Okay, so you can see over here, smallest 12-month increase since the period ending September 2021, which is why I do believe that this CPI is actually one of the better ones that we have actually seen. Although, if you were to look at this graph in this manner, you might think that 0.0% for July was actually one of the best. It is true, it is one of the best. However, you do need to take into consideration that today we get 0.4 is in line with expectation. And at the same time, the only thing that is always so darn annoying is the sticky inflation for shelter. For rent prices, for shelter prices, for Airbnb prices, whatever it is. That is the only thing that's still sticky in this current report. Okay, so let's move down a little bit. Okay, energy prices, like I told you guys in my expectation video, I don't think energy prices is going to be going up. Energy prices is starting to become a contributor to disinflation or even deflation in this current situation. So over here you can see apparel. You can see used cars and trucks also proving to give you a little bit more of a deflation matrix over here. However, for apparel actually going up by 0.8%. I'm not sure what's the reason for this so-called sticky inflation for apparel. Okay, but anyway, let's talk about food. Okay, I've always talked about food for CPI. I do want to get this over and done with quick. So let's go through this quick, okay? Food index increased by 0.4% in February. Honestly speaking, pretty good as it is, but same thing, I'm going to be singing the same song, okay, which is food prices are super duper sticky. Inflation for food is very hard for you to get off. When you add on to it, you can't really get it off. You can't really do deflation, you can only do disinflation. Once you get the price up there, you can only slow down the price increase. You cannot go down on the price. It's pretty hard. Okay, so food away from home rose 0.6% in February. Same thing. Over here you can see Food away from home rose 8.4% over the last year. For the full service meal rose 8% over the last 12 months. So clearly you can tell that food prices has always been continuously going up. Albeit a little bit slower than usual right now, okay, but it's still continuously going up. So not exactly the best thing. Natural gas index decreased 8% over the month, which is a huge, okay, this natural gas, this is not energy index. The natural gas actually went down 8% over the month, which I'm pretty happy about it, because this is starting to see a kind of like a trend for us to actually get out of like an energy crisis of some sort. Okay, the largest 1 month decrease in the series since October 2006. That's what I'm talking about. Which is why I said it before, energy is going to be a core contributor to how we actually get a different level of deflation. Energy index, albeit, okay, well, we actually got quite a good month, albeit energy index did rose 5.2% over the past 12 months, as compared to when we actually heard about it during the mid of 2022, when the whole Russia-Ukraine war is still ongoing. Okay, energy prices probably for the whole past 12 months, you're probably looking at 17%, 24%, something ridiculous. Right now, we're only at 5.2%. Again, this is not deflation just yet, because we need to go. Right now we are all the way up here, okay? No, we are already cutting it downwards. Right now we need to cut all the way to flat line to where we actually started having hyperinflation, and then go down a little bit for deflation before you can actually say that prices are coming down. Right now prices are not coming down, prices are only slowing down. Okay, so over here, the core inflation shelter index was the dominant factor in the monthly increase in the index for all items less food and energy. Household furnishing and operation, which increased 0.8%. Airline fares index that rose 6.4%. Cars and trucks fell 2.8%, and continuing a recent downward trend. Okay, I think that's all I actually want to show from the chart itself. So airline fares also kind of rose by 6.4%. I'm not sure what to really think of it. I'm not sure if people are starting to take more airline, they're taking more trips out. Of course, this is most likely from the whole recovery from COVID as it is, and people are starting to travel a little bit more. Chances are that's probably the case. So I do think that when competition actually kicks in, airline fares most likely is going to be dropping down a little bit again. So I'm not that concerned, because I don't think that that is a very persisting factor, especially for airline fares, because when you actually throw it into a capitalistic world, chances are they're going to find it out. Competition is going to rule everything out. So let's talk about FOMC. Okay, so a lot of people are saying, with this current report, honestly, we are all expecting it to be a 25 basis point increment. Let's be honest here. Okay, previously, before the whole bank collapse, we are expecting 50 basis point increment, because Jerome Powell came up to testify in front of Congress, saying that, you know what, maybe we have to revise our SCP upwards. Maybe we might have to bring it up even more. We were expecting from the previous SCP to be at 5.1% federal terminal funds rate. Okay, and then Jerome Powell basically came out and said, you know what, we might have to revise it upwards. People are expecting 5.5. Some people are expecting even up to 6% for the terminal funds rate. So, with this sort of report, and with the bank collapse that just happened, okay, 3 banks just basically went underground, okay, that means that the Federal Reserve is going to need to definitely be a little bit more cautious when they just sign. All right, we're going 75. Okay, we're going up 50. Banks, Federal Reserve in general, they are not able to actually do that as easily anymore, because they need to look at market conditions. First things first, bank collapse, especially due to the fact that this was actually all brought forth from this fast increase of interest rate. Federal Reserve would most likely want to take this point into consideration. Second point, inflation. Like I always said, the Feds always take a lot of the data into consideration. Inflation is definitely one of the most important, if not the most important factor that they actually take into consideration, because it's their job to bring inflation down to 2% in the long run. So, for the Feds to get down to 2%, they have to look at inflation report. Right now, they're looking at 0.4%, and let's be honest, they were happy to see a 0.4. Of course, they were hoping for a 0.2, okay? But if they were to see anything 0.6, 0.7, I'm telling you that they are not going to care about any sort of bank collapse, and they are continuing with their 50 basis point increment, because it's not the Fed's job to keep those banks open. It is the Fed's job to keep inflation down. It's their dual mandate. Okay, of course you can actually fight the point where the Federal Reserve is technically a central bank, is supposed to help all the banks and such. Yes, they're only supposed to help with regulation. If they are the one that's gambling with their depositors' money, it's not on the Feds. Which is why people are arguing, why are the Feds trying to bail out all these sort of banks? But of course, a lot of politicians out there are saying it's not exactly a bailout. It's just kind of like a backstop, according to them, a BS. Okay, it's a BS. Okay, but anyway, I'm glad that inflation turns out to be a lot better than expected. For the long run, for the economy, it's a pretty good thing. However, I don't think it's very good for my bearish portfolio. But hey, what can you say? You cannot play both sides and win both sides. You know what I'm saying? So, it is what it is. But anyway, inflation turns out to be pretty good. I'm going to be looking forward to this market. And later on, I might go to the gym. But anyway, thank you guys so much for watching. I'll see you guys in the next one.